Hello everyone and welcome to Multifamily Monday. My name is Jesse Gruen. I'm the Vice President of Multifamily Investments here at Avis & Young. And today we have a very special guest here in the Avis & Young offices, Shelly Dunbar with CommCAp Advisors. Shelly, welcome.
Thank you. Thank you for having me.
Yeah. Well, we're here today to discuss financing and really financing as what's going on in today's market. And Shelly actually does, I guess we call commercial brokerage or banking.
Yeah, commercial.
Right?
CommCAp is a commercial mortgage banker. We're similar to a broker. The only difference is we actually service loans, and we actually work specifically for life insurance companies. So once we close a loan with them, we actually are still in the deal with you.
Fantastic. So Shelly's been in this market for a little bit of time, and CommCAp, now is CommCAP specific to Nevada?
Yeah, CommCAP is based in Las Vegas. We're headquartered there. We've been there since 1996. We have still completed loans in Reno, but just being located in Las Vegas. So it's recent to have an actual mortgage banker in the market.
Fantastic. So like Shelly said, she is a mortgage banker. That means she helps source loans for clients on new acquisitions or refinancing and working with different lenders that are out there in the marketplace, correct?
Correct, yes.
So there's different types of options. Now Shelly does financing for all different product types, correct?
Correct.
So just give us an example or flavor of different types of products that you financed.
So we finance anything from industrial to self-storage to retail, multifamily. We do all sorts of loans specific to what the client needs, construction, bridge, really anything out there with the exception of, I would say, land.
Interesting. So is there a minimum loan size, or what are typically your parameters in working with clients?
Generally, the minimum loan that I'm beneficial to work on is $1 million and above.
Got it.
A loan, not actual acquisition.
Interesting. So like Shelly said, she does the whole gamut of commercial financing, and that's in addition to acquisitions and refinancing, correct?
Correct, yes.
But for today's conversation, I'd like to specialize more so on multifamily and really what you're seeing in the multifamily industry, because it's interesting. There's different options, and I think a lot of people don't realize this.
Yeah.
When it comes to multifamily lending, right? And I'd like for you to touch upon some of the options that are out there that you work with on behalf of your clients, like agency, for example, CMBS or life.
Okay. Yeah, so we have the option to work with agencies, which is Fannie Mae, Freddie Mac, and then obviously HUD falls within that, though we don't see a lot of clients go that route. And we can expand upon that later if you want. CMBS, and then which is commercial mortgage-backed securities. They're securitized and sold. And then life insurance companies. So on the front end, when you need to invest in a policy, on the back end, the life insurance company needs to invest that money somewhere. And a portion of that is in real estate. Additionally, we work with banks, and each product or lending source rather comes in when it is most beneficial to whatever the client's exit strategy is.
So let's talk about that real quick. When would someone want to use an agency lender like Freddie or Fannie versus CMBS or Life? Typically, how do you guide that conversation with your clients?
So when I talk to my clients, I generally ask, what is your goal with this property? Are you a long-term holder? Do you think you may want to sell in a certain period of time? Are you more rate sensitive or are you more prepayment sensitive? And once I find that information out, then I explain all of the different options related to them. So if they're a little bit more sensitive to a prepayment penalty, then typically Fannie Mae or Freddie Mac could be an option because of the flexible prepay that you can structure in the loan. Or if they want absolutely no prepay at a certain point, then you're pretty much only going to be left with the route of a bank.
Interesting. So what would be an example of a pro and con, let's say in working with CMBS?
So CMBS generally right now comes in a little bit more competitive. Well, recently was more competitive than agency because agency was hitting their caps on how much allocation they had. So CMBS priced a little bit tighter on rate compared to agency. Now that agency has increased their caps, they have very comparable products, but you can oftentimes get a little bit more interest only
Okay.
with a CMBS lender, depending on the leverage point, than an agency lender.
Interesting. So you mentioned a cap, right? And that was a big concern, I think about a month ago,
Yes,
right?
yeah.
Because really there was no guidance on what that cap would be. So can you explain to our audience that would use a Freddie, Fannie, how that affected them and where it's at now?
So now they've been allocated a little bit more money, so the spreads have come back in, but because they were running out of money essentially with their uncapped business, with their capped business, spreads widen and interest rates to the end user were drastically higher than they could get from a CMBS lender or a life insurance company. They were still better than what banks could offer for a long-term loan, but they just were not as competitive as the other two lending sources.
Interesting. So you mentioned interest rates, and I know interest rates have been a hot topic lately. They've been going up and going down. In fact, I think this morning the 10-year Treasury was roughly at 1.577, right? Yeah. Which means it's creeped up a little bit over the last couple of days. Slightly. So as interest rate, I guess, risk goes, what have you been seeing out there that your clients have been doing? Have you been seeing more acquisitions, more refinancing? What's the kind of the layout of the multifamily land?
I still see, because of the demand in locally here in Reno, I see a lot of people trying to get creative with maybe converting motels to multifamily, and so I still am seeing a lot of value add requests. The challenge with some of the requests I see, they fall within a gap that it's not necessarily a bridge loan and it's not necessarily a perm loan. And so the challenge of financing right there, you're going to end up in a higher rate market.
Okay.
When I do see the acquisitions on a more stabilized asset that doesn't necessarily have a ton of value add component to it, I see a lot of struggle with getting the loan dollars where we need it, because the price is just a little bit high. The seller is realizing a little bit of the value add gain when they're selling it. And so the loan that we can get is pretty limited based on debt service coverage of, we need a minimum 125 for any lender, really. And if you don't have that minimum 125 debt coverage, then your loan proceeds are going to be dropped down.
You know, it's interesting that you say that, because I think we're at in the marketplace right now. Prices are getting very high. They're getting very difficult to underwrite.
Yeah.
Right? And you either have to come in with a substantial amount of equity, right? Or have a very good relationship with the lender. And usually it's the equity component. What we're also seeing is maybe seller financing or seller carrying paper or mortgage wraparounds, right?
Correct.
And I would assume that that's the biggest competition to what you're dealing with is the private money or hard money. Is that the case?
Yeah, and sometimes though I caution people when they do seller carry to make sure that they understand what their takeout's going to be, because when the seller carries, sometimes they will provide an unrealistic loan for when the buyer needs to then refinance out of that. So the seller will, do 85% leverage at a pretty decent rate, a pretty high rate, but still decent. Well, when you're looking at refining out of that later, when the seller's note is maturing, generally you can't find a takeout loan to cover all of the proceeds. So that's one thing to be cognizant of when you do that.
And that's a very good point, because a lot of clients think that they're going into a deal, right, with fantastic financing options, sticking with the seller or doing a wraparound mortgage, right? But to your point, if you want to get out of the deal, good luck. You either have to put more money into it to refi, or you have to sell it and take a little bit of a hit.
Right.
Interesting. So let's transition to how a client would work with you, Shelly. In other words, someone wants to find financing for their property, either being a new acquisition or a refinance, right? And a lot of people associate the mortgage banking or mortgage brokerage industry with not only paying, for example, you a fee, but also a fee from the lender upon closing of the mortgage, right? But I think what a lot of people don't realize is there is inherent value that you bring to the table. And I'd love for you to explain to them really what that value is and how that process works when initially working with a client, and the best time to start working with a client.
Yeah. Well, the first part is we like to get in as soon as possible. The moment that you're looking to acquire a property, it's easier for us to jump in there because we can underwrite it and manage expectations and kind of let you know what the loan looks like before you even put the property under contract. On a refi, call it 60 days out with maturity is ample time. We would like to get in probably, say 15, maybe 90 days prior, just to give us time to give you quotes. And to answer your second part of your question about the fee, we actually in most cases aren't more. So CMBS lenders, life insurance companies, and agency are at par, meaning they don't charge an origination typically. They have an underwriting fee, and it's just our origination. Their underwriting fees are generally between $2,000 to $4,000. And the only time that there is an origination fee is with maybe one or two specific life insurance companies. With banks, generally there is an additional fee, but because a broker is involved, they typically reduce their origination fee. Because they realize that when we provide them with a package, it's pretty much complete, and we have a lot of the questions already answered ahead of time, so that it's easier for them to create their credit package that they need to send to their credit committee. And so generally that's kind of, sometimes we add a little bit, but it's not a ton.
It's interesting that you mentioned that. And I don't know if I'd go as far as saying this, but really when a client is looking to acquire a property, you have a whole different gamut of sophistication levels with clients. And you have some that do their own underwriting and some that kind of go off of a gut feeling. Right?
Yeah.
I can imagine that if they bring you into the process early enough, not only are they either underwriting or using gut feeling, but they're coordinating with you on your underwriting to see if where the two underwriting's at makes sense.
Yes.
So you can help provide value in that aspect as well.
Absolutely. And generally ahead of time, I'm already, depending on the lender that they are interested in going with, I'm already speaking to the appraiser up front to make sure that my underwriting or my understanding of the property isn't completely off from theirs, and we're talking to the environmental consultants to make sure that there are no issues on site so that we have a smooth closing. So we generally help with the closing process to try to make it as smooth as possible.
And I can tell you that Shelly's underwriting is fantastic. In fact, she didn't know it at first, but we worked together on a deal where I was brought in to provide a BPO or broker price opinion with one of her lender clients. And I had a chance to look at your underwriting and do the underwriting myself from a broker perspective, and we were very close. And I thought you did a fantastic job on your underwriting, so I appreciate that. Absolutely. Yeah. So how does someone get a hold of you to help with their financing needs, Shelly?
Anytime. My cell phone is always on me. My office line is connected to my cell phone, so I'll get every sort of ring possible.
Perfect. And what is your cell phone number?
My cell phone is, I'll give you my office. It's
Sure.
775-345-3659. My email as well, which is sdunbar@commcapnv.com, so CommCAPNV.com. Either way, I'm available regardless.
Fantastic. Well, I thoroughly enjoyed the conversation we had today, and I think our audience got to get a little bit deeper dive into really what is mortgage banking or mortgage brokers, depending on how you look at it. But we really appreciate your insight, and hopefully someone out there will reach out to you with any type of acquisition or refinancing needs.
Well, thank
so,
you.
Shelly, thank you very much for your time.
Thank you.
Have a great day.
You too.
Bye-bye.